following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are going to have a great new year. Got the New Year's Eve situation going on tonight. I hope nobody gets lights any loud firecrackers. I think the news and the what's happening in Brussels has got everybody freaked out, which they probably should be. This is a serious thing, but have a good time regardless, and be safe. And I'm looking forward personally to knocking some things out. I'm a procrastinator in general, but got a lot of things I'm hopefully going to get finished for you guys over the next day or two or the weekend. I love deadlines. I like the whooshing sound they make when they fly by, though. It's yeah, Albert, we can talk about Note in the Den about the Philippines. I've got a lot of experience in that place. Obviously been there for a while, back and forth, and there's some cool situations over there, and it's a great place. Can be kind of like the Wild Wild West in some senses, but maybe I can tell you a couple of things to stay on track with over there. All right. First of all, I want to show you guys before we get started today, and by the way, I'm going to mention for Al's sake, for once, I'm going to mention the phone numbers to call if you guys ever want to call in. 877-927-6648, 727-445-1044. That's 727-445-1044 overseas. First of all, I want to show you the news schedule. Just want to remind you guys of what's going on as at the start of the year here on TFNN. Really cool people on this network, and one of the cool sets of folks here is a show called Living a Primal Lifestyle. Nico and his partner do this. They're doing it pre-market, 7 a.m. Tuesday and Thursday. If you've never seen it, watch it. It's incredible. Makes me want to go out and get healthy for starters, but they've got some good things they talk about and some products that they talk about on there that are just incredibly useful. My show, obviously, 8 to 9, stay the course, 1,000 points of light. Then you got Larry after me. You got some changes here. Money Masters is going to be Tuesday, Wednesday, Thursday. And then they're going to do Nadex on Monday and Friday at 10 a.m. Those are all at 10 a.m. I just spoke of. Tiger Technicians Hour at 11. Then you've got Thinkorswim. This is kind of a show really educational as far as trading options. I'm a big fan of trading options. I'm a big fan of of using our information in the scanner. And again, these are kind of video outputs I'm doing. The information in the scanner to try to, get some kind of biased opinion, get a trading plan based around that information, and being able to stay in those trades and kind of weather some storms on a long-term basis. There's no better way to do it really than to tend to wrap an option spread around that. So for instance, the S&Ps have just been all over the place lately, and I don't have to kind of tell you that. But if you're looking to try to stay in a situation around an inflection point and dig in, for instance, if you wanted to be long around that, what was it, 19? Let's just pull that chart up really quick. Had the dollar. Let's go to the S&Ps. If you had wanted to stay in that trade and kind of dig in around 1994 down there, and obviously there were some things going on around 2057 we talked about. But let's just say you wanted to get long, didn't want to get shaken out on some crazy high volatility moves that are happening this time of year on low volume. For instance, that session on swim lessons by Thinkorswim around 12 o'clock. They're going to tell you how to do simple option strategies and even complex option strategies. But one of the simple ones around that situation I just spoke of, long futures, long in the money puts. And what do I mean by that? So they're going to tell you, like, basically give you an education. You can call in, ask really specific option questions. And on that scenario, be able to kind of understand that you're not going to take a lot of heat in that particular spread if the S&Ps go down, being long in the money puts instead of buying some insurance below that inflection point and being long there, and then taking a lot more heat let me get my chart right again here. Taking a lot more heat in a situation where you really don't have to. If you're looking for a more significant move, you'll have to have more significant move to actually take advantage of a spread like that. But you go outside and play croquet or whatever you're going to do during the day and let that particular spread just do, it could go down 1,000 points and you really wouldn't care that much in that scenario. So, and again, you got David White after that, and then the Tom O'Brien show, obviously, and then you've got Andy Heck Commodity Hour on Tuesday, Thursday. Trying to get coordinated with Tommy too, a Spanish English show after Tom's show with an associate of ours down in South America, Juan. You guys have probably heard him a little bit. He's fantastic, and he does some different things with our information that I think you guys would really enjoy. Let me get my chart back up here. And I have an enormous amount of respect for Juan in general. And that's the guy I'm going to go down and see on the 14th, 15th of January down in Medellin. And, man, go on Airbnb. Go down to, just literally do this today. Go on Airbnb.com and go to Medellin and Antioch, Colombia, and look at some of the places. Like, we're going to get like a 3 or 4 bedroom penthouse thing, or even rent a house, some palatial estates that I've seen on there. But look at that site, look at the prices. It's incredible. I mean, you could live like Pablo Escobar. I'm not supposed to say that. You could live like a king down there. Get some, I'm going to get some business done, but there's some cool spots on that site, and it's an interesting read, to say the least. There's some expensive places on there too, but there's some really cool spots on there for 3 or 4 bedroom penthouse places in Poblado, which is a cool part of Medellin. All right, guys, we're first of all going to get into, I want to show you this ruble trade that we've been beating the desk about. It's kind of reversing today, but I want to show you that, we had talked about this possibly reaching at some point towards that 80. This is incredible. I mean, really, I'm completely blown away by how devalued this ruble's gotten. This is obviously a high point. We could shoot for that, but this is our weekly. There's no reason to step off the gas pedal. We've talked about digging in on this trade as we had pulled back to that maximum pullback here on the weekly on Fridays around 59. This trade's still on. Here's our daily. This is kind of obviously more than average width of bar here, and we're kind of rattling around, moving around significantly on different price levels within this day. But you don't have a really serious breakage of rules here yet, even on this move up. I mean, we're all over the place. This spread is massive on this. You ought to keep your eye on it. And as you can see, the 60 minutes just all over the place. We literally have over a full handle spread on the ruble right now trading. So again, these are signs of a top, but we don't have any new profiles attempting to appear. There's no yellow bars. This is still full on long, in my opinion. And remember, we're still looking to buy support if we can see some new inflection points on this trade. Euro. Terry, I plan on seeing Miss Columbia, and I will definitely give her at least your condolences. Let's see here. All right. Well, so, we talk a lot about this 109 area, and I like how this is acting. It's, You could look at this as kind of spike up and consolidate, but I look at this as dollar's probably going to move higher, U.S. dollar. We're getting down into an area. We're kind of crowding this area. You could look at this. Okay, we're in the DMZ of support on the euro, but I'm not looking at it that way. This is 108.80 to 108.99 on that weekly unfair low, and I'm looking for a whoosh sound, just like I hear my deadlines going by me. That's supposed to be a joke. But I'm looking for the euro to kind of get through both of these areas and then move relatively quickly on the downside. And I'm saying that in relative sense to the dollar. I mean, if you look at what the dollar's doing today, this is cool because, we talked about trading off of this 98 again. I got shaken out of this trade before, but right now, again, we've closed above. We come back and pull back to those inflection points, and you can see how powerful these are. I'm going to pull up the scanner really quick. Where are we at? Here's the where are we at? There we go. So we're going to look at this, and I'm pretty sure we don't have a correct. Wow, we do. No, this is not updated. We're still working on that, and it will be finished. But as you can see, we're still in that range down here. But this is something. I'm sorry, this is the euro. Here we go. So we're looking at, again, eclipsing both of these inflection points here, 109, 108.99, 108.80. And I'm not looking at that as support. As you know, on the euro, I'm looking to sell resistance and sell breakdowns. Sell resistance, sell breakdowns. Let's go into the dollar really quick. I'll show you this on the scanner. You get all these inflection points here. And here we go. There's that 98.04. Now we've gotten past and used 98.30 as support. We're trading about 98.60 right now, real time. All right. Canadian dollar, still one of my favorite trades. Australian dollar, this is really neat how this is working out too. We've kind of been talking about this from the long side. Talked about it yesterday, getting past 72.77. And here's the daily. Thanks, Larry. It's so cool to have these fresh eggs, man. I mean, they're everybody should try that. Get you a couple of hens and let them do their thing. Still looking at 74.5 or a little bit higher on the Australian dollar. I like how this is acting relative to the U.S. dollar. We're going to talk about this when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with the Aussie dollar. I really like this trade also because if the commodities, God, and Larry would probably know this better than me, if they ever turn north again, and again, got a lot of deflationary pressure going on. We talked about kind of that normalization of labor costs and all that going on, and the economies in the east kind of stagnating a little bit as far as the normal ramp up they've been doing. So if they ever turn north, Australia, this Aussie dollar may head north, and I love how it's holding in there I'm going to show you why. This divergence that happened on our navigator, higher lows, lower lows, price action, higher lows navigator, and also that commodity kind of fundamental relativity sense that we're throwing in here. I mean, I just like this thing at the very least getting up to 74.40. And the cool thing is, especially about the scanner, you see all these different profiles on different time frames. I'm going to go in there, and as you can see, I mean, we're still showing this arrow down. We've been in a defined downtrend for 28 weeks on the Aussie dollar. We still haven't broken above, and that's what that's saying, and that's arrow on the daily situation too. But if you'll notice, the green shoots are happening here, the arrow up, and you've got inflection points that you can orient stops around on these shorter term time frames also. And so that what this means is, for instance, if I go back to the Aussie dollar and I see that 13, I see that 11 in the arrow up, this 13 means, and it's only going to show those arrow up or arrow down in the balanced areas because, so this 13 means I've 1, 2, 3, 4, 5. So the last time I broke out of a box, 13 bars up, and then on the daily, we're within a profile, but it's kind of a continuation pattern. We haven't broken down. There's a really nice floor here for short-term guys around 73. We've been talking about buying this north of 71.69, I think. So we're doing all right in this trade, and I still think it's got some legs left. And 73 coincides with that POC on the weekly too. So remember, this is kind of the top of the hill thing. You roll down one side or the other, and I really think that you can orient some stops around there, and hopefully this thing will ride a little bit higher. But remember, don't let it run away from you. If this thing reverses, just get out and keep the powder dry, as they say. Yeah, talking about hens again. I mean, chickens are not the cleanest things in the world, especially if you keep them in a confined place. But if you can figure out a way to let them kind of get some elbow room and run around, Albert, to answer your question, getting too many and doing a Herbert Hoover, chicken in every pot, they end up being like pets, and they've all got different personalities, and it's weird, man. I mean, to keep them in a laying house and treat any type of animal or human being for that matter, keeping them in a confined place is torture. And these, it's weird. You won't want to put one in a pot if you have some hens. Interesting little girls. So, and the eggs are great. All right, so here's the S&Ps. I want to come back to those. We got about a minute and a half before this next break. I'll bring one to St. Pete with me. Yeah, keep it in a bag like Borat. If you saw that movie, it was every aspect of that movie was hilarious. I tell you what I'm going to do. I'm going to hit gold really quick. We're just this is something Tom and I were talking about yesterday on his show. You could look at this two different ways, but I think just kind of throwing everything together and all things considered, this thing's got problems, and that deflationary pressure is still there. This is kind of the anti-inflationary, or excuse me, what the deal is on gold, and as far as inflation goes, and I don't really see a lot of end in sight for that. And remember yesterday we kind of talked about that whoosh sound that might happen on the downside before this thing starts heading north. There's not a lot of free lunch out there in trading, and they usually will bring people to their knees before they turn something around, they being the marketplace. And so that's my take on it. And I do not like the way this thing is crowding this 1060 area. I know we've reversed this morning a little bit on a short term, but again, I'm looking to sell breakdowns below 1060. If we get a weekly close, and that would mean, therefore, today, below 1060, I think some people are going to start really starting to wonder about this. And if they can catch it lower at, let's say, $1,000 an ounce, and people will just get out until that happens. So that's my take on gold. Silver's even a worse situation. So we'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we have a caller. Tucker, are you there?
I'm here.
Great. How are you today?
Good. Good morning, John.
Good morning to you.
I want to, first off, wish you and the fine colleagues you have at TFNN a very happy New Year.
Thank you. Thank you. You too. It's been a great year, and looking forward to the next year.
I'm looking forward to the using the TAS scanner this next year. Pretty excited.
Great. I'm looking forward to keeping my promise about getting all this stuff done before Monday for you on the charts and all the videos and things. So that's my gift. So hopefully you guys will enjoy it.
Confident that you'll do that.
Yep.
I wanted to talk to you this morning, if I can, again about that Dusty 500 market breadth chart.
Okay.
And first, I want to just kind of tell you what I normally do now to trade, and I basically ride the waves of the markets. What I try to do.
It's been a little crazy lately. I mean, this is kind of extreme volatility, and the breadths of it's been all over the place, and I know you know that, but go ahead.
Well, yeah, and what I'm trying to do, when it's volatile, the market's volatile, I can make a lot of money. I think I make more money because as long as I follow my trade plan.
Right.
And so what I do is I use TradeStation. I use a 120-minute chart and basically ride the waves. And I have a chart that's set up with, I call it PRISM. It's price, relative strength, stochastic, and MACD.
Okay.
And I use a 120-minute chart, and so when the items are oversold or the indicators are oversold, and they turn back up, I go to the 15-minute chart, and I usually enter when the 8-period exponential moving average crosses the 17-period exponential moving average.
Okay.
And then, of course, and my biggest problem I have is getting out of trades too soon. So what I did is, and that's just kind of a little bit of background on how I trade.
Okay.
And what I'm trying to do is take the S&P 500. So I did some evaluation on that, and it's really, really amazing. But I noticed when you take the hourly chart, anytime the price gets up to, say, 60 range, or if it gets to 75 range, between 70 and 75, it all inevitably turns down the price. This is on the short, when the market's short, or long, either way.
On
either
the 60,
way, the green or the blue.
On the 60-minute breath, you mean?
Yes.
Okay, yeah, that's something we're actually doing on the videos is some extremes like you had talked about before, and then go ahead. I'm listening. This is great information.
So what I did is I take a reading about every half hour, let's say, on that,
okay.
And I throw out of all four time frames. I throw them out into an Excel sheet just because I wanted to be able to see the changes and the fact that I have CRS. I can't remember stuff anymore. Too much data to try to remember. But what I found is on the 29th of this month.
Okay.
In the 60-minute chart, the 77% of the items were above or green, and 4.4% were below or in the red.
That's pretty extreme.
It is. Yeah, I thought so. And I said, well, everybody's talking about a Santa Claus rally, but I'm going to take a chance here. And so what I did is I bought 3 different instruments relative to volatility and the S&P 500, because I'm using that kind of as a general indicator of the market is what I'm doing.
Okay.
And I bought those 3 instruments, and then I sold 2 yesterday. I got taken out on 2 yesterday with nice profits, and 1 I sold out this morning. And incidentally, I made enough to pay for a new computer and 9 months of your subscription, so I felt pretty good about it.
That is great. Man, I love hearing this stuff. And you know, Tucker, as a footnote to what you're saying, you know, there's been, I mean, on the long term, there's also been something in your favor to kind of take that stance. I mean, the middle ground really has just been peaking, which means that, you know, are these moves actually real? You know, I mean, that's another thing that I'm going to talk about in the videos is, you know, a lot of the stocks in the S&P 500, you know, were really almost at all-time middle ground levels. So there's a lot of pieces to the puzzle, but please continue.
Well, what I always have trouble exiting too quickly, because I've over my trading life, I've had really good profits, and then I've watched them dissipate, and then I beat myself up and all that. I'm sure you never do that, but
I never beat myself up over trading. Tucker, that's probably the most wrong statement anybody's ever said, but go ahead.
I said that a little tongue-in-cheek, because I know we all
Yeah, I know.
But anyway, I'm trying to use that, you know, once you get in that trade, and what I'm trying to do with the volatility in the market, swing trade for me used to be, when the market's trending, it's a little longer. Now it's days or hours,
right.
You know, to make the profit. So anyway, I've started taking my profits quicker than I have, and I'm trying to hold on longer. So I'm using the hourly charts. I'm at market breadth, for instance. When it turns up, for instance, if you look right now at the hourly, the green or the red's above the green. Right. The red's at 51. And the way I had kind of analyzed from my information that if it gets above, you know, between 50 and 60, it's kind of a caution. And between 60 and 70 is a concern. And if it's above 70, you can almost back up the truck.
Right. Yes.
And that's what I did going the other direction. But if you look at the
it's almost like those RSI and stochastic thresholds.
Right.
But you're hitting it right on the head. Keep going.
Well, that's where I'm trying to tie those together, and how those, you know, what, I don't know how you calculate those, but I'm guessing that there's something in there that, you know, relative to that.
It's all based on the internals, and unfortunately, those internals don't trade at night. And then you have sometimes these gap up or gap down situations in the S&Ps, and then the internals have to kind of arbitrage themselves to that, futures print.
Right.
But I think you're discovering, without me actually doing these videos, a lot of cool things that are in esoteric things that a lot of people can. I mean, for all intents and purposes, there's a zillion indicators out there, and if you can always find with some of these indicators one way to be long or one way to be short, and I've seen charting platforms with like 500 different canned indicators in there that people can use, and doing too many innuendos and esoteric views on different time frames, it's hard to satisfy everybody. So you've kind of found a way, based on your appetite for risk, to use some of this information. And the long-term guys out there who are trying to just, tuck or hedge their portfolios or go to cash or whatever, who are not sitting in front of the screen all day, this would just be way too much information for them on a short term, So you're providing right now a really good framework for somebody who's, trading a little bit more often, I would say, than a guy who's got like the Cisco and IBM dividends coming in, and that's kind of what he focuses on. So this is great. I mean, there's a lot of different ways to use this information on different trading plans, and I think you're finding a great way to ring the register on some pulling some points out of the market here. This is awesome.
Yeah, I want to continue just a little bit if I can.
Yeah, please do. Please do.
I probably should have gone, another. Those products have moved on up from where I took my profits, but that was my target, so I was happy with that.
Okay.
Unfortunately, I probably could double my profits, but the thing is, when I looked at the 1 hour chart, it was down there and it's just crossing up. I looked at the 4 hour, it just crossed over from red above green. And I look at the daily chart, and it's just coming off of that bottom. And I guess what I'm trying to tie together is to help myself stay in the trade a little longer. And in this case, of course, like I say, I stayed with my plan, so I got what I wanted. What I could have done is sold half of them and rode more profits on up, which I do sometimes too.
I think that's not a bad idea, what you just said at the very end there. And reason being is because, we talked a little bit yesterday. My goodness, it's starting to rain like cats and dogs here again. We talked a little bit yesterday about the major inflection points you have to, no matter what the breadth is doing, you have to pay attention to these inflection points on the index itself. And that big inflection point was 2057. And if you kind of started thinking that, hey, maybe I need to take some off the table here, and that kind of coincided probably with that 2057, that was a smart thing to do. And, taking off half of it while some of these, and again, like we've had our long-term breadth stay positive. We've obviously broken above profiles on our daily, and I'm going to go back to that right now. Let me just pull this up. We've had our, we kind of closed above and pulled back, and these have been real erratic moves in the S&P all of a sudden. I mean, we had, as you know, I think we had 7 or 8 days in a row that we had 100-point moves in the Dow every day, up or down, and that was pretty historic or epic right there. So, as we closed above this 2057 and came back and retested, I think you've got it with the long-term breadth looking positive, and being in a state that it's in, I don't think that taking some off yesterday afternoon or whenever you did that around 2057 for the S&Ps, I don't think that was a bad idea.
No, I'm happy.
No, I'm happy for you.
When you pay for a new computer and 9 months of subscription, and then you have to complain because you didn't get more, that's kind of unfortunate.
That sounds like me. Never happy. It could have always been more. But
yeah.
No, that's great. And for guys who are trading and sitting in front of the screen and it's hard not to push the buttons. I say that probably too many times. But what you're doing is saying, hey, I'm going to wait patiently until some thresholds are hit. And in your case, some exhaustion moves. And actually, by the way, Tucker, I've got a very smart friend up in Chicago. His name's Steve Banger. He's a very analytical guy. He does a lot of volatility plays. He seems to pull money out of the market every week. I've just never seen anything like it. And he waits for these, on a shorter term scale. He waits for these, volatility expansions and thresholds to be met. And he's usually not in the market for any type of trending situations. He waits for some kind of expansion one way or the other. So I admire what you're doing, because I admire what he's doing.
Thank you. Well, I'm looking forward to thanks for listening to me first off this morning.
No, thanks for calling.
And I'm looking forward to the videos.
Great.
And the charts. Should be an interesting year next year. And
thanks.
I want to wish you a happy new year.
Thanks, Tucker, and thanks for calling in. This was a great call. I think everyone's probably enjoyed it.
Thank you very much.
You're welcome. Talk to you soon.
Okay, bye.
All right. So, that's just incredibly great information that Tucker was speaking of. The longer term views for the longer term guys that are not going to be trading as actively, that may not apply on how he's figured out a mousetrap that's starting to work for him. And that makes me want to go into a whole nother conversation. For proprietary traders, and we've got them in the Philippines, what we do is we put a base foundation set of rules in front of everyone. And we feel like that base foundation set of rules is going to, at bare minimum, keep people break even. It's really up to them to take some of the information and kind of twist it in a unique way to where it's going to work for them based on, everybody's different. And that's the cool thing about proprietary traders. Nobody's a robot, and these automated systems, you probably got to have 1,000 automated systems going on surrounding the same topic to really cover different ways you could squeeze juice out of trades. I mean, and human beings obviously have different attitudes and appetites for risk and thresholds for pain, and when they get stressed out and when they don't get stressed out, and what's going to work for them. So Tucker's a prime example of that, and he's figured out a way to take some really good base foundational information and twist it in a manner. And this information is very unique. I don't feel that anybody else on the planet is outputting information that you can get in this scanner. And I'm not just saying that from a sales standpoint. I think it's a fact. And, this is just great to hear this. So I think we got a break here. So we're going to be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show, and thanks again, Tucker. Just incredibly good insight. And just reading some of the den comments. One of the things, too, I want to say is you guys are all winners for just coming into this venue, not because of me. I'm here because of TFNN's here. One of the real, having humility and being able to accept other ideas and suggestions and not staying inside your own world of I know it all kind of attitude. That is the mark of actually a good leader, for one thing, but also somebody who really wants to succeed. And it is the way to go, to be open-minded and to listen to other things that people that have worked for other folks. It's a great endeavor that you embarked on here to get involved with TFNN and listening to the David Whites, the Andy Hecks, and just kind of learning and absorbing as much as possible. If I had done that in the past, I would have saved myself millions of dollars. And Larry will tell you exactly the same thing, is not being pig-headed about your ideas only. So getting some perspective and being able to, kind of take this information in, Rome wasn't built in a day attitude. Let's let's try to get a business plan together before we start our business type attitude is really the way to go in any business. And you are supposed to treat this endeavor as trading as a separate business. So, I just commend all of you for coming into the room and learning as much as possible and viewing as much as possible. Some of this stuff you can throw out the window. It may not apply to you, but this is just it's just incredible to be associated with you guys. One of the things Tucker's has mentioned before, in particular, is this ETF section. We actually had this turned off. We were adjusting, trying to get these charts straight for a day or two last week, but and we sent a note in here. We're actually going to send notifications in here, and we're going to have them flash now. I got the programmer, so you'll definitely see this, but we had stopped it and restarted it. But that being said, one of the things that I've been kind of focusing on, especially with the XLY, I mean, Amazon's very overweighted in this particular ETF, and I'm looking at our daily and I'm looking at our weekly here. So in our weekly and our daily, this XLY, the internals of the XLY are really causing this breadth negative priority on the downside. All right. I probably didn't say that in the best English, but what I'm trying to say is we're ranking this particular ETF way down in the cellar. All right. It's breadth negative still in the weekly as this market had climbed up significantly. So what does that mean? That means there's a big disconnect between the leaders of this and the rest of the pack. So I'm still looking at, and I was looking at Goldman Sachs. It's the most heavily weighted stock by far in the Dow 30. I want to talk about that if we have time. So as we look at this, I'm still looking for the XLY to kind of start, showing some relative weakness even more so. And if Amazon does a little key reversal outside of what it did recently, getting above that weekly unfair high, this thing could see some significant downside. So, again, Amazon's trading 687 this morning. But again, any types of pullbacks in Amazon, I think the XLY could come apart at the seams. Staying below 684 on Amazon, that is. All right, guys, have a good new year, and we'll pick it back up Monday. Stay tuned for all the guests on TFNN today as long as they're transmitting, and we'll see you later.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.